Good morning, everyone, and Merry Christmas if you celebrate. This is now a Boxing Day in the UK, but we decided to run this little class to kind of wrap up the year, because I know there will be some people aiming for that Christmas rally in equities, which technically should start today. So we're going to see what's going on around the markets. All right, if you're here for the first time and you just randomly stumbled across this video, welcome. My name is Deeyana Angelo, aka Market Stalker D. I'm a Series 3 licensed trader, and I specialize mainly in energies and metals, but also DAX, which we currently don't yet have on Topstep, but we're looking forward to that in the new year if we keep upvoting that post that I keep posting in the chat. So let's start with that. And also, I did say I was kind of done, but last night I was unable to sleep because I had a little nap in the afternoon. And I kind of woke up and I was a bit bored, so I decided to take a look at what's going on in Nikkei. Managed to do a nice long Nikkei trade on one of my remaining XFAs. So here we go. So 1.2K for the day. And again, that's probably going to be me for real this time. So yeah, it was a simple value rejection trade based on some options levels as well. And now we're seeing a bit of a pullback in equities for the London session. So let's have a look at ES, even though it's probably not going to be super lively at this time of day. So right now, ES is actually slightly below VWAP, attempting to do the retracement. After Asia, didn't really do much, but if we look at Nikkei is the main product for the Asia session, even though the CME contract is not that liquid. However, it closely follows the Osaka contract, which is why you see really good movement. So even though the CME volume is not that great, it is still very, very possible to make quite a lot of cash even on one contract. But just be aware that Nikkei is pretty expensive. It is $25 per tick. So just make sure you have, enough buffer in your account if you're going to be trying this sort of thing. But this is what happened. We basically had that typical kind of a bit of a shakeout before a reversal at the start of the Tokyo Open, and then it just started rising. Now, I think I caught it fairly late. I think I caught it somewhere up here because I wanted to see what's going to happen with the initial balance from Tokyo. Let me do the full screen because I'm always getting prompts from Bruno to do the full screen. Right, so we should be all good now. And yeah, so I just ran it from somewhere around here, tried to sort of front run the movement a little bit. But it was supported on tick chart as well. So it started rising above that ribbon that I like to use as a timing tool. And then I took 1.5 R, I think, out of the whole move. And then I decided to go back to sleep. So yeah, obviously I'm a little bit tired from yesterday, but also a little bit under the weather because it seems that both me and my husband sort of picked up some sort of a cold or something from somewhere. So it's not great. But yeah, I'm going to be making sure that I get some rest over the holiday season as much as possible so that I can be ready for the new year. Now, nothing much to say here. So we had a typical rise during Tokyo, then retracement from about 6 a.m. my time. What would that be? That would be midnight Central time. So around about midnight, you typically get this little bit of a sell-off. Think about it as sort of a long squeeze that we get into the MOC towards the end of the New York markets. It's exactly the same mechanics. So basically people just taking profits from whatever's happened before. And now we're seeing yet another reversal from overnight VWAP. And the way I'm looking at this, Nikkei sort of dies out for London. However, we might be able to find a similar trade in equities that are trading pretty nicely during London. So with that in mind, I know that everybody's obsessed with NQ, so let's have a look at NQ levels. So one of the things to note in NQ is that we opened quite far outside above the value area high, so that outer edge is set at 21,852 roughly. Is that too far away? Well, not really. I mean, we opened within 1% away from that. However, we are hitting the average session range low as well and attempting to turn around. So right now we kind of popped the initial bounce to the downside. The average session range low for London was at 21,944. So let's put a little line to visualize that. Just ballpark, that's where it was. Let's make it dashed and green to kind of delineate the intention. So yeah, what is the expectation here? Well, again, it's one of those line in the sand moments. We could have a value area mean reversion. We could also have a failed auction from about this area. Now, every time things are a little bit unclear, I like to have a look at the options activity to find some more confluence with whatever is going on. And it's all a part of the situational awareness. So one level of interest that could be a problem is 20. Excuse me, I'm just gonna try and cough. So one level of interest is the gamma exposure level 2, which is just sub 22K. So let's say 22K is GEX2, with some calls up at about 22,050. So if we manage to get all the way up there and into that area, sort of a zone, I think we're probably just going to drift in between those levels. However, if we manage to defend 22,000 in some shape or form, we have some space all the way down to 21,900 and then obviously further down to that value area high as well. So that would be a good risk reward for the shorts. But, you know, we have to take seasonality into consideration and the fact that we could have another Christmas rally, right? So we need to wait and see what New York is going to do today. But for now, we have a potential for failed auction here. So that's something to consider. Whenever I'm making hypos, I do try to make hypos that tell both sides of the story if possible, and that prevents me from developing any sort of a heavy bias to one side. I know that some people like to trade with a bias into the day. That's never really worked for me because, you know, then you're just looking for longs and sort of being blind. You kind of put blinkers on and you can't see anything else. And one of the exercises that I used to do when I was still a developing trader some, decade ago, especially for intraday, is to just write down what you see, right? Now, I know we don't have TPO charts here yet, so I'm going to be relying on my other charting tool just to explain what's going on. So for example, right now, I would be writing things down such as just what I'm seeing. Open, above value. Obviously using the levels that we already have. So open above value, some buying at ASR low, not a big excess to the downside. potential for failed auction up to 22K, or, and here is where I'm not liking this day, mean reversion down to value high. So that's literally just an objective observation of what we have. So it's not biased. It's not me doing like wishful thinking trading, or I want it to go higher, therefore I'm just going to start clicking buttons. This is, just what's going on. What do we have currently? And this whole London session is meant to be more of a class, an educational class on how to develop your skills more. And if you've watched the main broadcasts last week, you know that me and Anna Maria are going to be running our own VIP teams. So that's going to be pretty exciting. And this is the kind of stuff that, I would like my group to be like more aware of, obviously. So just that objectivity and situational awareness using whatever you're using. I'm not going to be trying to drastically change the way, you trade. But at the same time, there are there's data that we can derive from both the profile and the option chain that can be extremely helpful in objectivity. And objectivity is where it's at, right? If you see that your trade is not working out, like let's say that I have that 22K level and I didn't manage to get into the failed auction, and then we get to the 22K, some people will be so long biased that they keep going into an area of clear resistance. So that's something you want to try and avoid. And this sort of exercise, even whilst you're in a trade, can be very useful. Now, if we start to dip down below the initial balance and, maybe even start either building volume and not really seeing much buying, or seeing people who are trying to buy and then getting smashed to the downside, that will be a sign of that mean reversion potentially starting and kind of invalidating the Christmas rally, right? But again, for now, we're still inside the initial balance. We're spending time inside the initial balance. And just to put it on the chart so that we can visualize that better, this is going to be so much easier when we get the TPO charts in the new year. This is your initial balance. So first 30-minute chart, first 30-minute candle, second 30-minute candle. Then we pop a little bit below it. Let's make these candles very big because we're not old. And you can see that the market has pulled back into the initial balance. Now, many of us who use profile considerations, we like to front run these ideas from levels that we already have. Like in my case, it would be statistical algorithmic ranges, which are effectively projected areas of how much movement you should expect in any single session. Some people even go down to like a couple of hours expectation, like how much do we move during the initial balance? What is the average range there? What is the average range for the overlap? What is it? I don't do it to that degree, but I did have a trader who used to do that with great success. And in fact, one of his main approaches was to have a look at the projected ranges for the 90 minutes time window that he was looking at the markets, and then just wait until either side is effectively exhausted, and then just run his trade like that. I like to use the entire session, and then I do use the time of day quite heavily to make my decision of what should happen. However, that applies more for the New York session than it does for the London session, because the London session, especially for these products, is a little bit less structured, because we don't have things like daily forex expiries and that happen at a particular time of day, causing a knock-on effect and all of that good stuff. So it's a little bit tougher to trade in that respect. However, there are still statistical things that, like for example, DAX, it's its main session, right? It trades mainly for Eurex and London. There's a pretty high statistical chance that it starts to turn around from about 11 o'clock my time. And that's, if that doesn't happen, then you have the outlier day and you can kind of fish for the other side. Again, that objectivity coming back into consideration. So let's go over some people in the chat to see what your struggles are and what your objectives might be for the new year. You know, I'm very, very keen to discuss those with you guys and girls to kind of formulate the plan for 2025. So, you know, make that resolution that you're going to develop your own skills in the new year. And then we can talk about how to approach those issues. And the first thing I'm going to say is whenever you're tackling weaknesses in your trading or in life in general, like, you know, trading applies to so many other areas that gives you transferable skills. So, for example, let's say that you have several issues, and, you know, feel free to put down what your biggest hurdles are, right? So let's discuss those, and let's make this into a nice sort of end of the year wrap up, you know, with a bow to come up with a plan. And then we can see which of those is the biggest problem, and then we can discuss how to tackle it. But as always, you don't want to tackle multiple things all at the same time. I think that's one of the main things that that a lot of people go wrong with. So Khaled says, not waiting for my A+ setup. See, that's a pretty big generalization. So not waiting for your A+ setup, there is more to that, okay? Why are you not waiting for your A+ setup? What causes you not to wait? Is it FOMO? Is it too much trading in the run-up to your levels? Is it impatience? And that can be tackled really well with the hobby. You know, I renovated most of my house because I was waiting for good setups, right? So, you know, you need to have a measurable weakness that you can then track. So that's the whole point of working on your development pretty seriously. And think about it, athletes, top-level athletes, how do they work on their weaknesses? Well, they certainly don't tackle all of them at the same time. And this is why they have trainers, right? They go, well, actually, today we're going to be working on this. And then they spend weeks sometimes just working on that one weakness to either minimize it or eliminate it. But usually it's just down to minimizing it. So let's have a look. Let's have a look at some other people. So Khaled, feel free to elaborate. Okay. So he says, usually the market moves very fast with volatility. Okay. So maybe try trading something else. Maybe, you know, when NQ is going absolutely nuts, that throws off your mental game. So that's the real problem. It's not that you're not waiting for your A+ setup. It's the fact that maybe the market is too quick for you for now, right? Maybe you'll be able to do that later. But for now, obviously, your brain is struggling to process everything in real time. So maybe try YM. Dow moves, you know, pretty nicely, but it's a little bit more tolerable than NQ. So let's maybe try and unglue ourselves from the Nasdaq and perhaps focus on you know, doing a combine or even just a practice account for, you know, 3 weeks or so to see how YM behaves, and maybe you will gel with it better. You know, I don't like NQ on most days for the same reason, because sometimes it's not maybe the fast movement for me. For me, it's more down to the fact that it doesn't respect levels. So it just overshoots levels. So I always have to, you know, look at ES and SPX and a whole bunch of other charts to make sense of it and to get a more zoomed in area where I can limit my risk a little bit better. So that's, you know, my issue with NQ, but yours, you say that it's moving too fast for you. And that just means, well, for now, maybe that's not your jam. You know, go to YM, try RTUI as well. Also a very good, slightly less crazy product that moves a lot. Let's have a look at some other people. So T3 Metric says, I'm not respecting my personal daily loss limit and keep blowing XFAs by letting a small red day turn into a big red day is frustrating. Any suggestions on how I can respect my rules? I would really work on walking away. Like for example, in the XFAs, this is the live account. So in the XFAs, we actually do have some extra risk controls that could be very helpful in your case. So for example, if I go into risk controls, You see this trade limits thing? I would highly suggest that you look at how many trades on average you do for your good days, for your very good days, and then to use those number of trades in a day as a limit. That way you're not working on a P&L based on your dollar amount, but instead you're looking at the P&L from number of trades per day, whatever happens, right? And like, let's say you limit yourself to, let's say, 6 trades per day. And one thing to note here is that you want to, if you're scaling in and out, you need to account for that. So let's say that you scale in about 2 or 3 times per trade, this platform will count every scale in as a separate trade. So keep that in mind. And most platforms do that wherever you, I think even Guardian Angel Trader does that, or Ninja. So if you're scaling in, just make sure that the maximum trades per day reflects that. So let's say you want to do 6 trades per day, but you scale in twice. So put a limit of 12 here because, you know, you're accounting for the scale in. That way, whatever happens after those 6 trades, the platform is going to lock you out. Now, I know that some folk on Twitter think that using trade risk controls is a crutch. However, it's the very first step in establishing discipline. Why? Because think about it. Back when we had the daily loss limit, you didn't have an option to go past your daily loss limit. Whatever happened, the platform would lock you out, and you just had to deal with that. And for me, that was actually a better way to do things, right? Because it's, but you know, people wanted the daily loss limit removed, they removed it, and now we have to, like, you know, work with the maximum loss limit. But you still have the option to set the personal daily loss limit as well. However, I don't like working on P&L based things for like dollar amounts, purely because you're still focusing on your P&L. So you're trading your profit and loss sheet. You're not trading the process. And the process is how many trades per day do I do when I do really well versus how many trades do I do when I suck. I guarantee you it's going to be a lot more on the days when things are not going well. So you need to find something that will effectively save you from yourself, at least in the very beginnings. And the thing with discipline, it's not a linear process, right? It's not like, oh, you get disciplined and then you will never screw up ever again, right? It's that you're going to have odd days where you're a little bit off. You're going to have days when you're a little bit, you know, annoyed by something, or you're a little bit sick, or you're not feeling like yourself, or you haven't slept, or somebody annoyed you. You know, there will be times when your discipline just is not on point. And this is why the risk controls is such a good thing. So go back through your stats and see what the maximum number of trades per day on your good days was. Put that in, okay? And that way, whatever happens, the platform will just lock you out and you will have to deal with it. And the way it works, like when you first introduce yourself to like the leash, to be on the leash rather than be off the leash, you will feel uncomfortable. It feels horrible. You're like, I want to trade more. But what you want to teach your brain to do is that, okay, no more for the day. No more. Like, this is enough. It's enough. And if you can't do that for yourself, use these limits to try setting those limits without your control, right? And once you change this, I think they've set it up so that once you changed it once a day, you won't be able to change again. So if you set it to 12 trades per day and you've already scaled into, let's say, one idea twice, it's still going to count 2 trades. So even if you change this to like 16, I don't think that's going to happen until the next day. So it's like, you know, they are making sure that whatever you do, you cannot change the setting on the day. And I think they're also working on the fact that you won't be able to access these for a certain time. That would be an excellent addition to the risk controls on Topstep X. The only place where I've seen that before is on Ninja Trader, Guardian Angel Trader, which is a third-party plugin, right? And I wouldn't trade really without it, to be honest. I know that I'm certainly not the same trader if I don't have that. And just by the fact that Topstep is really trying to give you all of these tools, there are really good ways to try and unglue yourself from bad habits. So T3 metrics, that is one of the things that I would do. Try with maximum trades per day, backed up by your personal performance history. So take a look at your winning days, whack in the maximum trades per day, and also make sure that you use the day when you were reading the market well. How does it look when you're reading the market well versus the day where you kind of struggled but still ended up profitable. So take all of those into consideration and then come up with sort of like the average number of trades per day to put into this section. And that should really, really help you to start setting some good habits and to give up. We're not going to have every day that's green, but we're going to be learning how to deal with that, learning to let go of a day that's not going well. It's a really difficult thing to do, okay? When you're just like, oh, this is annoying. But some people who are a little bit newer to the process, they just keep going and keep going and keep going, and then the XFA is gone, and then you have to start everything all over again. Wouldn't it be better if you just go, actually, I think I'm not good today? And it's okay to say that, okay? It's absolutely fine. You don't have anything to prove to anybody. Trading is all about how good of a loser you are. How controlled are your losses? And if your losses are not controlled, you're still not there. It's as simple as that, right? Ryan says objective is 1 live plus an account, 3 on Combine and 1 on XFA. Okay, so if you get pushed to live, you won't be able to have another XFA, right? So I have a throwback XFA that it's still there, but at some point that's going to get transferred as well. So they're just giving us a little bit of time. However, in the new year, I'm expecting all of the XFAs that we have to be transferred to live and to just not allow us to open up new ones. Now, we do have a little gift from MP for those of us who are on air. We are going to have a charity XFA because obviously we have to be here nearly every single day. We have to trade, and just to give us a little bit more freedom and a little bit more, well, I suppose less pressure. They're giving us a charity account. So each of us are choosing a charity of our own choice, and 90% of profits from those XFAs will go into that charity. I think it's an amazing thing to do. But unless you're an on-air personality, you're probably not going to have a charity XFA. So it's just going to be a live account because they recognized that your skills have grown enough to be called up to live, and you will just be working with the risk team. So there won't be an XFA. So just keep that in mind for those particular goals. Combines, you can always have a combine if you want to practice or try something new. That's fine. Rusty Golfer says his problem is taking profit too early. Okay, so when you say too early, ask yourself whether the profits that you take are statistically viable. Are they negative risk rewards? So did you take it like way too early, in which case that is a problem? Or did you take it too early but still made 1.3, 1.5 R, 2R, 3R? Because if that's the case, there's no problem there. You took a setup, you got a statistically viable target, and you're done. The name of the game is not to grab every single tick on the day. The name of the game is to grab a decent chunk out of whatever is happening on the day, but you don't kind of cry over spilled milk going, oh, I didn't stay in, I missed out. Focus on the positives. If you had a statistically viable target, you didn't miss out on anything. You gained 1.5, 2R. I will never really quite get people who are like crying over the fact that NQ went like for Brazilian ticks and they're like, oh, I only took 75 points out of it. You took 75 points out of it. like, well done. Go pat yourself on the back. Go buy yourself something nice. Get that positive reinforcement going whenever you do something well. Don't go moping over the fact that you took a chunk out of it, as long as it is a statistically viable target. However, if it's not a statistically viable target, if it's still a negative risk reward, that needs work, okay? That means that you are just scared to let it go. And again, that comes from a lack of confidence in the setups, which can be caused by NQ being absolutely nuts. So I do get it. However, something that I would say there is to either go to a higher time frame or just walk away from the platform. You have a stop loss, you have a target, right? So what's the worst that can happen? Your stop loss gets hit. You get data from that. You lose a trade, you have data. Why didn't it work? Was it a setup that worked before? How many times did it work for you? So, we go down the rabbit hole of, why didn't the setup work out? However, if your issue is, like I said, that you just want to catch the entirety of the move, that's a slightly inefficient way to look at it, because you will never be able to get every single tick out of the market. All right, let's have a look. Reesmoy8 says planning and then jumping before my plan pans out. Also adding to losers, thinking it's a range instead of seeing it as a trend. All right, so that would be, yes, that would be a planning thing. So if you're thinking it's a range-bound day and yet it's a trending day, what sort of tools from the data we have do you actually use to tell you whether it's a range or whether it's a trend day? Now, here is where, I do push profile in people's faces, because on profile, this is very easy. If you have the initial balance and if you have a single-sided extension, yes, you can hit times of day when it ranges, but generally single-sided extension will always mean some potential for a trend day. It doesn't mean a range day. But if we start to wag around to both sides of the initial balance, it's kind of like an elastic band being pulled to both sides, right? So what happens is that if either side gets a little bit stronger, or, opposite party appears, you ping back to the middle or rotate all the way around. Or same thing happens from this side, right? So it's like ping. So if you use that as your measure of whether it's a range or a trend, that can help you. So let's say objectively what's happening now is that Nasdaq is going into a mean reversion trade, right? It's going below into a single-sided auction. So it's not a double-sided auction. And therefore, the potential for this failed auction long is no longer there, right? So now we have the mean reversion opportunity down. So it's a trend day. I'm not going to be looking for range-bound trades and mean reversions up to VWAP until we hit some more relevant levels. Instead, I will be trying to get in on the move. Now, you also need to have a level for a trending move. So I would say, actually, Coach Jay did a whole thing with Coach Ray about a year and a half ago or so, where they were talking about day types. So I reckon that would be a very good thing for you to go over. So day types. If you look in, I think it's in the coach's classroom somewhere, and look for day types. I know that Jay has told people about it before. And maybe even if you look for Coach Jay's posts, you will be able to relocate that, because I'm pretty sure that he's posted it in Discord. Okay. Okay, let's have a look. Bankroll says, lost 600, up 1K today, almost got another 50K, easy game, now I know. Be very careful of saying that. This is not easy. As soon as you start thinking it's easy, that's when the market is going to humble you. So just by looking at that statement, it tells me that you haven't been trading for that long, because nobody who's been trading for a very long time would say that this is easy. The market state changes, ranges change, volatility levels change, and it's a never-ending Like, sure, you can have an easy couple of weeks, even an easy month or two, but this is not easy, okay? So just be very careful of statements like that. Okay, so we have Evan saying, do you often notice that New York session will go back to the London session open, or does it often respect London's move to a degree and keep that sentiment? It very rarely keeps the London sentiment. So one thing that you will notice across the board with most products is that sessions in between, regardless of which session it is, they sort of have this, like, I call it the Tom and Jerry chase. Just going to clear my throat again because this stupid cold is really starting to get to me. Yeah, so sessions usually have this chase between them, right? So if one session extends a lot, the other guys wake up and they go, oh man, shit, this has gone way too high. We can't really make money around about this area. What do we do? And then usually if you can find some core resistance and stuff, that's where the market makers are going to get involved. And just for like extra information, we did have a gamma wall at 22,060. 22,060. So let me put this here. So this is where you would expect the market makers to do something, and lo and behold, they couldn't go higher because we already had Friday smashing upwards, and then Asia didn't do that much. London opens. I mean, they tried. They definitely tried. Couldn't really get too much higher. So London opens and they go, holy crap, we're very high up. What do we do? Adjust inventory. Now, adjust. And so this is what this is, right? This is market makers hedging and adjusting their inventories to make sure that their risk exposure is still on point. And that's, that's something to consider. Every time you have a new session, I would look for a reversal. Maybe not immediately, but within the first hour or so, you will get the inkling that maybe they're running out of steam and they're about to head the other way. That's where my mean reversion setups play in. So basically, the way I look at it is to wait for that first move or whatever they want to do purposefully, just miss it, right? After that's done, I look for any extension of the move, overextension of the move from relevant levels to bring me to the other side, right? So yeah, that's definitely a statistically viable setup to basically go the opposite way to whatever the other session did. And if you observe even NKD, like Nikkei, how it moves, it's the same thing, right? So Asia took it higher, then we had a sell-off into the end of the move. Then we had the London Open. They tried to take it higher. You can see a little wick up. They couldn't do it. And now it's sort of settled in a range. But, volume is now going to die out. And it's not really going to pick up that much until the next Asia session, right? All right. Regardless of the instruments being discussed, there's always a little gold on the show. Yeah, well, hopefully that's the whole idea, right? to have some sharing of experience and discussing, and especially into the end of the year. I'm not like I said, I saw an opportunity in Nikkei, but. Actually, speaking of gold, why don't we have a look at gold? Because it had a pretty big day, like 500 ticks or something on, I think it was Friday. Was it Friday? No, I feel like it's Monday. I don't know, it's not. It's Thursday because we had like 2 days off. So yeah, it was, was it Tuesday maybe? No, we weren't on Tuesday. So Monday. Yeah, so Monday we went massively up. Yeah, I keep confusing that. So gold, for now, very quiet and kind of glued to a very flat VWAP. For me, that's like not really there. But yeah, gold nuggets discussed here into the end of the year, as usual. Teo says, good morning and Merry Christmas to you. Merry Christmas, Teo. Very good to see you. And happy holidays. Yes. Thank you. Okay. Rusty Golfer says, that's what I do best, set my stop and break even and walk off. Yeah, just make sure not to set that stop to break even too soon, because that's one of the mistakes. You know, have some room in it. I don't even like to do that. I like to decide for myself. But obviously, if you're having a problem with taking profits too early, then yes, your solution is to walk away, protect your position, walk away. Whatever happens, happens, right? Can I ask what DMI you use? It's got the volume with it as well. It's not the volume. I just like to see... so I don't think it's the volume. I think it's the... What do they call it? They call it columns or something. Do they call it columns? Yeah, they call it columns. So it's not volume. If you want volume, you would have to put actual volume on it. There we go. So this is volume. Okay. Let's go back to NQ because that's kind of moving, so it's better to look at. But you can see compared to Monday's volume, this is like nothing. So, you know, this is probably just some people maybe offloading some positions into the end of the year. I don't see this as like active selling. It's just like inventory adjustment, maybe to get this to some more sensible areas before they can like push it back up again. So we'll see what happens. But yeah, keep in mind that kind of Tom and Jerry chase that all products really like to do. You know, anything goes too high up, they have to adjust to a degree. You will very rarely see outlier days where it just keeps going up and up, and usually that needs a catalyst. It needs like FOMC rate decision change where, you know, some repricing is really necessary, and then it just goes into a mad trending day throughout multiple sessions. And then you have these sort of things. I would call this a pretty normal day, right? Now we've had a big range on Monday, which is why overshooting some of those levels that were calculated from you know, regular non-outlier days, you wouldn't expect those to be super respected, or you would expect them to overshoot and then sort of reclaim, which is something that NQ really likes to do, and why you don't always meet half the time. So yeah, the DMI thing, for me, it kind of varies. Like if I'm on a very low time frame, sort of 100, well, not even time frame, but 100 tick chart, my inputs would be 5 and 10. Right now, I'm on a 30-minute chart, so I just wanted a more kind of smoothed out, slower thing. So I have it on 10 and 21. But this is not volume. This is just literally columns instead of the lines, because I feel that you can see what's going on better than just like a whole bunch of squiggly lines in it. So columns for me visually represent the downtrend and its strength at the same time. I think there is a DMI indicator somewhere that includes volume, but I don't think this one does. So just keep that in mind. And the DMI that I use is just a standard one that comes with Topstep directional movement indicator. So, yeah. Evan Bishop says, I asked that because I shorted around 22.17, already took target 1, and keep it a runner that is going to be a break even. Okay, that's great. Yeah. Good job, you know, great trade, beautiful trade. Just wasn't sure how NY deals with London. Yeah, so if you're thinking of holding this for the entire day, seasonally, U.S. equities have this Christmas rally. And if you were listening to Peter Tuchman, he says that it actually starts on the 26th, so today. It's a little bit of a misconception that it starts in the run-up to Christmas. So it actually starts after Christmas into the New Year's. So yeah, that's what I'm expecting from equities. It's kind of partially the reason why I did the NKD trade, because I was like, well, this is its main session. It's trying to break out. It's either going to work or it's not going to work, right? There's not really a third option there. So I tried along on the basis that we did have some options levels and that we were breaking out of the value area. And then it just went. So I was like, okay, that's pretty good. And I didn't keep it like for 15 minutes, right? I kept it for like 3 hours. And then I took profits. So it took 3 hours to get there. Very quick. But that's my style of trading. I like to hold trades for quite a few ticks, and I can sit on trades. That's my strength as well as my weakness, right? So I can hold trades until the cows come home. But at the same time, sometimes I hold trades too long. So, yeah. Thoughts on the end of the year rally. So those are it. I do think that we will have it. Everything's kind of setting up for it. If we can get down to some sensible levels. Average daily range for the 24 hours on NQ falls around 21,783. And let's see if we have some options levels there as well. Let me just find NQ charts. There it is. 783. So we have a bit of an area of interest at 21,751 in the options. If we are not able to hold that, then we are going to have a nice run down because there's nothing else. I don't really see anything else. But yeah, Christmas rally. I think if it is going to turn around, it's either going to happen already at the start of the New York Open, or we're going to have some sort of a reversal, maybe from the London low on, let's say Tuesday, maybe, London low. That's in and around the same ballpark area as the ATR low. So yeah, we have a range of about, what is that? As usual, 50 candles on Nasdaq from about 21,805, which would be ballpark London low. 805, and then all the way down to 21,753, roughly 750, let's say. So there you go. That's where I would be aiming for any reversals in an ideal setup. Now, if it comes ahead of that, I would need to use some other areas on the fly, so market generated information, depending on whether we have the initial balance, how are we behaving for the New York initial balance, are we failing the auction, are we succeeding the downside auction if it occurs, and then make your decisions on the fly based on that. Obviously, that takes quite a bit more skill, because it's down to like very fast thinking, especially on NQ. And you see Nick Vortic, he does it really well. He's very skilled at that. And he's absolutely fine taking like 10, 20 points. But if you're looking for a Christmas rally, and if you are good at holding trades longer, maybe even have a look at ES. ES can give you a million ticks on days like these, if you are expecting that sort of a move. However, keep in mind both sides of the story. If we clearly get sellers in, doesn't matter what Christmas rally, this or that, Christmas rally, Christmas rally, right? It was an election year. It was a very odd year in general. So maybe we don't have that. Maybe we have a sell-off, a Christmas sell-off, brewing Christmas more. We had the rate cut. It's, anything can happen. This is not, this is not an event that you can bank on every single year. You can on most years, and this is why you have to stay objective. So just stay objective, have good tools to figure out whether they're selling it off or whether we're just kind of fishing for more business and then failing to find more business lower. That would be one thing to look for. As always, for me, that would be profile. There will be lack of single prints, big excess on the long side as well. So, that's always a sign of strength. If you have a big, big buying tail after we try to go lower. And that can even happen inside the initial balance, although the single prints inside the initial balance, I always find them a bit dodgy. So keep that in mind. All right, let's have a look at more questions. What percentage of your max drawdown for an individual combine do you personally risk? Advice, thoughts, comments. Have a blessed day. Thank you. So whenever I'm doing evals, I usually like to divide whatever the loss limit they give you, whether it's a daily loss or a maximum loss limit, I divide that by 10. Okay? So it's not necessarily, do or die percentage. I mean, I suppose it is because you're dividing the maximum loss limit, but it's just an easier equation. You don't have to deal with percentages. Just take a number and you just go, well, the 10th of this is blah. That becomes your daily loss limit, at least for the first part of doing the challenge. Because the worst thing you can do is, and I know you can get resets and everything. However, in the new year, we're going to have a limit to how many resets you can do in a day. So you have to start slow, right? Start slow. Don't go all in and then go, oh, F it, I'm just going to reset. So dividing your maximum loss limit or your daily loss limit, if the company gives you daily loss limit, because I think we still have it on other platforms, because it's only Topstep that doesn't have it. Divide that by 10. So if you're doing a 50K, that means dividing 2 grand. Therefore, 200 would be your maximum loss limit. If you build up a bit of a buffer, you can release the purse strings a little bit. Not much though. Don't go from 200 to 400 to a grand and then to all of it, which is something I've seen people do. But go 200, then maybe give yourself, an extra 50, because you'll be on micros. $50 extra, it's a lot, right? Percentage-wise, it's a lot. If you get even more down the road and you kind of get into a safe territory towards that target, so you're over 2K, maybe you can increase it to about 400. Maybe you can double it at that point. But again, that's still a little bit too much for some people, because it just gives them an excuse to blow the 400, and then you're kind of, up and down on your P&L curve, which is something that we all try to avoid. You want to be as stable as possible and trying to have as less variance in your profits and losses. That's the thing that's going to keep you alive in your future funded accounts, whether it's XFAs or live. Doing it slower enables you to develop some very, very valuable coping mechanisms. And, at some point, once you develop your skills enough, the only thing that becomes a problem is your mental side. How do you handle losses? And really think about this. How you are in a drawdown, how you behave in a drawdown is really what defines you as a trader. It's not how much profit you can make, because that's the easy part, right? Setup works out, you get a big chunk out of it, awesome, peachy. But when things don't go well, how do you behave? Do you lose it? Do you start over trading? That means you're not a professional yet, because you don't have that control. You don't know when to say stop, right? You don't know when to say when. And you need to learn. Everybody needs to learn if you're going to do this, and on any serious form, whatever the amount of cash that you're making, even if you're making like 200 a day, that's still some serious money. Like, think about other jobs in the world that pay 200 a day. It's a good job, right? People have whole lives and families on 200 a day. So don't knock it. I know that we kind of lose our minds a little bit because it's all on the screen and clicking buttons is fine. However, every time you have a very big day, think about whether, let's say you lost 2K in one day. Think about when was the last time that you spent $2,000 on anything in a single day? So why are you doing it in a combine, XFAs? It's a lot of cash, So we need to kind of come off our cloud a little bit into reality and just realize that the money that you see, being made every day on TopstepTV, it's great. It's motivational for sure. But it can be a little bit demotivating as well, because many people are perfectly happy with 200-300, and some, especially folks on Twix, as Eddie likes to call it, Twitter or X. I personally got absolutely cut up with trolls when I posted my, streak of whatever it was, like 17 days. And I was making anywhere from like 600 up to about 1.4K in that particular XFA. They just completely like dismissed that. They were like, oh yeah, Bruce, like, oh, you do so much trading. And I was scaling in and out. So obviously it was showing up as like 20 trades, when in reality it was like 3 to 6, really. And I was trading micros in the beginning. So I would be starting with 3 micros and then maybe adding up to about 7 or 8 if I'm in profit and scaling out. And then I kind of started moving on to a more mini side when I had enough profit in the XFA. And then that showed less trades. But they were like, oh, but you did 20 trades, like, and you only made 600. And I was like, oh, you idiot. I was like, really? Because I made 600 trading micros, right? It's like, come on. So this is the kind of toxic community Twix is. You might post something that you think it's a great achievement, and then some other people are like, oh, you reach it, because everybody's a Warren Buffett on Twix. So I wouldn't put too much stock in what those people say. And I also wouldn't really focus all that much on trying to chase the big money, right? Especially if you're still relatively new. And relatively new, I will define as anyone who's been trading less than 3 years. Even 5 years, I would still say that you're pretty new, right? This is kind of like this type of a skill. It's the same skill as if learning to play a musical instrument. When you pick up the guitar for the first time, you don't expect to do like November Rain / solo in the first month, or even 3 months, or even the first 2 years, right? It's a technically very challenging piece. It requires a lot of practice, a lot of skill, a lot of accuracy. And yet Slash can do it when he's completely trashed off his face and still not sound terrible. Like, it wasn't great. There's this one performance where they're all clearly quite wasted. But he can do it. Why? Because he's got the skill. So his sucky days are better than most people's awesome days, right? So he has such high level of skill that even when his brain is impaired, he's able to do it. And how long does it take to get to that level of skill? Well, it's certainly not 3 months. It's not even 3 years. We're talking many years of honing your skill. And trading is exactly the same activity, even though it doesn't require you, to have muscles and stuff. You need to have muscles up here. You need to have speed of thinking. You need to have speed of processing. You need to remember memory, right? You need to remember a million things all at once. And that is the thing to strive for. Not, oh, I'm going to make $1 million tomorrow, like most young people think they will these days. Lower your expectations, adjust your expectations, and look at everything in ticks. And then you can extrapolate. For example, if you make 160 ticks on NQ or on MNQ, that's one hell of a day. Why? Because you banked 160 ticks. Now, if you were to trade minis, over micros, and let's say you were in with 3, which would be 160 ticks times 15, you're looking at 2,500 to 2.4K, right? And that's a great day, right? 2.5 grand in a day. If you still have the same day and you're, trading 10 lots, which would be times 50, you're talking 8 grand. Same trade, 160 ticks. Nothing changes but the position size. And yet, on micros, if you're in with just 2 micros, that's what, $1 per tick, you're making $160. That's the only difference. There is no difference between the amount that you're making here. 160 ticks is still 160 ticks, and it's still 160 ticks, okay? The only difference is where you are in your scaling plan, right? And if you do it too quickly, that's another thing. Most people don't survive the increase of the contract size. They do it too quickly, right? So you are able to do it slower these days. We are able to use micros. You can use a mix of micros and minis. If you don't want to jump from 1 to 2, you can go 12 micros, or you can go 1 mini and 2 micros. So you have 2 domes, click, 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 click. It does become a little bit more tedious, but it allows you to scale up in a more kind of calm way without doubling up on the position size immediately, right? Okay, let me see. I have 5 XFAs accounts. When I go live, how much equity will they give you? Well, it's usually okay. So how it works is that whenever you get a live transfer, whether it's your first live transfer or a future transfer that's happened on the fly, it's basically like this. They call you up to live. Whatever amount is in there at that point, you will have the possibility to take up to 50% of that upon the transfer. So that means whatever is in the account right now, they will be transferring 50%. I don't like trading when the transfers are happening because there's like a whole bunch of screwy stuff happening with the balances. So I will actually wait. But be aware that the live transfers can take about 3 weeks, 4 weeks on some occasions. So it's not a quick process because the brokerages have to process it. Sometimes the funding team is not always around because we have holidays like right now. And, everything gets even slower. But on average, like all the transfers usually take like a couple of weeks up to 4. Like for my live account the first time, like last December, I actually got the live account in November, but I didn't get it until January. Like it didn't, so it's like it was 6 weeks before I got it. For the transfers, they usually took about 3 weeks for me, and actually I'm still waiting on one. So don't really want to do anything before that's done. So you will have the opportunity to take 50% out upon the live transfer anytime you get transferred, whatever is in the account right now, right? So if you mess it up and if you go, I'm getting transferred to live, usually if there's nothing to transfer, they obviously won't transfer it. But the way it works is that as soon as you get the email that you're getting transferred to live, they will kill your XFA. So you won't be able to trade it, right? So it's just going to disappear. And, that comes with the email. It's like your XFA has been closed. These funds are being transferred to your live account. But whatever is in there, you can choose to take up to 50%. Now, most people take half the amount, but you don't have to. You can take 20%, 10%, 30%. Take some of it if you want to have, a decent amount of capital to start with in your life. But obviously, they can't transfer something that's not in there. So just, keep that in mind. Mo says, I don't think I'm cut out for this game. Risk too much and very emotional, not a good mix. So think about this. And, we're coming to the end of the stream anyways, but think about this. I want you to really ponder this over the holiday season. Why are you risking too much? And if you risk the amount that you don't care about losing, would you still be emotional? Or are you just causing emotionality to crop up because you're risking too much? So here's an exercise that I want you to do. Gear already said to you, and Gear is a very wise man. He's one of my market stalkers. He said, just trade micros. So trade micros. Decide on risking a very small amount. 1 micro, $30, right? Don't risk more than that. See whether you're still emotional. If not, then the problem is not really you being emotional. The problem is your position sizing is too large for the account size that you have and the drawdown and risk parameters we are given, which is causing your pain threshold to be very low. And therefore that pain point just crops up every time you're in a position. To solve that, you need to scale down. So try that and see whether you're still emotional, then report back to me, okay? Okay, we have another question. I passed a lot of the combines. I never made it to payout. What would you recommend? I would need to look deeper into the reasons why. Now, most people take too much out, so that's one thing. If you did do a payout, then lost the account, that's usually because it's too much of the payout was done, and then you didn't leave enough buffer in your account. But if you never made it to payout, that's a different problem. If you elaborate more, we can maybe talk about it on like next week, because obviously we're not going to be here. I'm going to be doing the reversal challenge tomorrow, but we can't really answer questions because we're messing around with the reversal challenge. But yeah, if you provide some more detail, we can discuss. Usually what happens is, again, oversizing, not stopping, over trading, just rushing. Some of the reasons for that could be the increase in dopamine, because you're so happy that you passed your combine, now you're funded, oh my God, and then you want to trade. And you have this like huge urge to trade the new accounts, and I have to trade it now. And those types of people are the ones who open up positions on Sunday as soon as the market opens. It's funny, because I was talking to one of the other prop firm owners that I kind of keep in touch with. And so basically he was saying, there was this guy that, he's constantly failed, and then passed finally. And then he started passing the combines or the evals. But usually what used to happen is that he would open up a position 1 minute after the market opened. He would be in with like 5 NQs. Not MNQs, NQs. And of course, he would blow it that same day. That's your typical dopamine squirt in your brain, where you're just jonesing for trading the new account, and you're like, you can't stop yourself. I would say that you need to step away once you get funded again. Step away and do like a fast or something. There's some studies on mice, so not humans, but mice, that are 48-hour fasts. Can help you level out your dopamine levels. So before you start trading, you cannot trade from an overexcited, euphoric, let's do this kind of stage, even though we all kind of joke around LFG, right? But none of us can trade from that side of things, because you do stupid stuff. You're not rational. You are overexcited, your limbic system is taken over, and you just want to trade for the sake of trading, not because you're following a strategy or because you're using your prefrontal cortex. So you need to recognize the dopamine imbalances in your brain and then deal with that. Once you deal with that, start with the smallest position possible to get used to the XFA. That way, even if you make a bit of a dent in there, it's not going to be massive dent. Put shackles on yourself. Put a very tight risk limit. Put like $100 daily loss limit for yourself, so that it stops you from yourself. Saves you from yourself. Stops you from doing stupid things in the first few days. Once you're over that, excitement, and if you don't want to do a fast, typically the leveling out of dopamine happens over a month. So leave it alone for 2 weeks, then come back to it, try trading 1 micro. Follow the process, follow the setups, put tight risk shackles on you, number of trades per day, as well as a daily loss limit, and just don't let yourself lose the account, right? Try, if you dig a hole, dig a small hole, okay? Trade small holes until you get used to it, until you get your head around it, and then you can start slowly building up a buffer. Remember that the goal of the XFA, the primary objective, is not get a payout. It's not. The primary objective is keep the account. You're not going to be able to keep the account if you are oversizing and trading 5 micros, 10 micros, 15 micros on the first day. Because that means you can dig a hole very, very quickly. And all that does is put you in a very bad mind state. And then it's all about digging yourselves out of holes instead of maintaining the account and then slowly building on it. Okay? Blue Thunder Investor says, I think being in the green matters more, and it's easy to get tilted and overtrade. Well, that's your problem, because the downside risk management is what's really important. Profits take care of themselves. You get a setup that works. The setup worked. There's nothing more to derive from that little piece of information. It's lovely. It's beautiful. Great setup, right? It worked. You don't learn anything from it. You don't learn about yourself. You don't learn about the markets. Nothing. But when you lose and when you're not careful with your downside, that's when it really tests your mental side, your approach, your system. And that's when you need to find some very creative ways to stay afloat. That's how growth happens. Growth doesn't happen if you let your discipline, go out the window and just do whatever you want to do, more trading usually. It happens when you recognize that, okay, this is not how it should be. Something's happened, something weird's happened. Let's see why. And let's see how we can put controls going forward so that this doesn't happen again, right? If a setup didn't work, like let's say that you're constantly going long off VWAP in a range-bound day, and that is constantly hitting you smacking you in the face. Establish some ways to figure out when VWAP is not going to be important. Like if it's really flat VWAP, no go on the VWAP play, because it's more likely that it's just going to run through it, right? So things like that. For me, it's the initial balance. It's, having the plans, using decent levels that are far enough away from the means, because I'm a mean reversion trader, in order for me to capture the types of moves that I want to see, right? That's not to say that I won't do a breakout trade, but my breakout trade is usually like for example, on NQ, it would be like a break of initial balance, then test of the initial balance low, or VWAP or some sort of a supply inside the initial balance before further downside. So that's my breakout trade, but it's still a pullback, right? I'm still looking for a pullback before I get in. I don't just jump in. I'm very uncomfortable just jumping in because I don't think there's a good way to limit risk there. And it's just not the way I trade. Other people might find that very helpful, but it's just the amount of time that I hold my trades. Those sort of approaches don't work. Those sort of approaches are for somebody who's keeping trades for maybe, a couple of minutes. And I have had some of my trades that are mean reversions that have only lasted like 5 or 10 minutes, but that's because of the speed of movement. It's not, because I only took, a couple of ticks. I will still aim for my 70 to 100 ticks, right? So it's a matter of volume and time of day. Victor says it's not really 50K you get anyway. Well, the nominal value of the account, if you were to play in a brokerage, would be 50K needed, right? But because this is a prop firm, obviously they're not just going to give you 50K. They're going to give you 2K, see how you deal with 2K, and then once you get past the buffer, you scale up. And there's no real, sky's the limit with prop, because you are effectively trading in a pool of funds. You're not trading, just the one little account. If you have 50K in the account and they deem that you can manage those 50Ks on a bigger position, they will absolutely, open up the purse strings and they'll go, yeah, you want 20 contracts? There you go. As long as you don't abuse it, right? All right, guys, that is it. I'm going to finish it up for today. Thank you for being here with me. I really appreciate it. Hopefully you've learned some stuff. And feel free to throw me your, your problems and issues. We had some very brave people here that put themselves out there and said, hey, this is what I'm struggling with. And hopefully I was able to give you some pointers of how you can start to tackle those issues. So let's keep this up in the new year. I'm really excited for the VIP team. So yeah, thank you so much for hanging. Let's do this all over again next week. I'm going to be on the reversal challenge tomorrow, and then again Monday and Thursday next week as well. So it's not going to be every day because obviously it's New Year's. Until then, I will wish everybody Merry Christmas and a Happy New Year as well. Again, thank you for being here. Let's keep it going. This has been TopstepTV. I'm Deeyana Angelo, and I will see you again tomorrow, I suppose, for the reversal challenge. Take care. Have a lovely day, everyone.